Deputy Owen Murphy.
Thank you, Chair. Excuse me, and thank you to Mr. Dunning and Mr. O'Keefe and to your colleagues for coming in today, and apologies as well for the delay. I'm going to go through the accounts for the Broadcasting Authority of Ireland, and then Deputy Dowds will go through the actual fund itself, and then other colleagues will come in and ask questions. Off the back of that, we got an update of the figures for 2012, Mr. O'Keefe, last week, and thank you for that. But there's more detail, I think, in the 2011 accounts, so I might stick to going through those, and where I think it's relevant, I'll jump to the 2012 figures, or where you think it is. Just to begin with the income coming in to the authority and the breakdown of that income, if you could just very briefly give me a description of the levy for broadcasters and how that is calculated for each of the people who have to pay that levy.
Okay. Yes, the levy is calculated based on there is what we term qualifying income, and it's generally all income that's received that's related to broadcasting related matters, and then there is the actual amount that's payable is then based on that qualifying income, the total that they pay. So it's a percentage of the qualifying income in the previous years. So the previous years audited accounts, they will submit that to us, and the qualifying income is based on that. We then also do an estimate for the following year, so that the invoices that have been sent out, say in March, which would be the first of the current year, that's based on the estimate of income that's submitted by the broadcasters before the end of the year.
And is the percentage the same for each broadcaster, or does it vary in between them depending on their role or what their output is?
It varies. Do you want to? I might ask my colleague Celine Craig to come in on that one.
Essentially, we take the amount that we estimate our expenditure is going to be, and relevant, that is divided out as between the broadcasters. There is a percentage applied, but it's relative to their own estimates of qualifying income as well. So there's three figures, if you like, in the mix of things, and that's then reconciled at the year end.
Okay, and hence then why we see then the transfer coming back if it's been overestimated. The money then has to be returned.
Yeah, there's a couple of factors in that, and certainly for instance, I think one of the points was the refund of levy in 2011, which was highlighted there by the CNAG. That was quite high, and that was the first year of operation of the levy, and the procedure in relation to the certification of qualifying income. That was quite a complex process we involved the Chartered Association of Ireland in devising that. What that meant though was that I suppose a rebate that could have occurred in 2010 didn't occur until the first part of 2011. So they effectively got two rebates during 2011. That's now been regularized, and effectively what you will have in each year after that is that probably in either the June or September invoice. I think last year it was in the September invoice. We would aim for the June invoice if the information comes in from the stations, but from here on they should get one rebate for the full year.
So it's a case of a new process, I suppose, working itself out in the initial years.
I think in the initial years it was a new process, yeah. And I think we'd be fairly satisfied that has now been well established. The industry worked very well with us on that as well. I have to say they were very, very cooperative in putting this in place.
Thank you. Then in relation to the other income streams that come in, licensing fees, and then other income, which in 2011 was, I think, 445 for other income. Other income was 506,000, broken down between deposit interest income, rental income, and other income was a third figure there. Yes. What's that other income?
I'm going to ask Ms. Craig to take that as well.
Yeah, there is an apportionment of costs as between the broadcast fund and the BAI's own actual costs, and the staff costs are recovered from the fund. So there's a charge out. You'll see also in the submission that we made that what might look like a significant increase in staff costs was actually a grossing up of the staff costs, which was done at the request of the CNAG, and that's also, there's a balancing figure there that comes through in terms of other income. So that would be included in.
Then that happens in 2012. We see the jump, say, from, if we're looking just at other income, from 506 to 952. You're talking about the fund recharge there.
Right, yes.
But in the figure from 2011, if you go to the statement of accounts that was provided, that 506 figure is broken down between deposit interest income, rental income at 51, and other income at 445. Was this before we were accounting for the recharge, the fund recharge figures in 2012?
Yes, the grossing up of that would have happened in the 2012 figures that we submitted to you.
2011.
Not in the 2011 figures.
So that other income then, at 445.
I think we probably need to come back to you just on the detail of that.
Just to say that's at page 11 of the document that I have, if you're looking for the right page.
I see the figure. I have the breakout of the figure. I just don't have the details of that to hand. We can come back to you on that. Yeah.
If you could,
yes.
Thanks. I'll move on then just to expenditure in relation to staff costs. We have 17 management and 21 administrative people in the BAI, is that right?
That's correct, yeah.
So, okay.
Some of the admin would be part-time people, but yes, that would be correct.
And the more accurate figure for those salary costs is the 2012 figure, because it takes into account the staff working on the fund and the money appropriated for that. So that's coming in at around
2 million.
2 million.
Just over 2 million. Yes,
okay.
That's correct, yeah.
I mean, what's the size of the fund that those people manage? We take into account the fund, the different sound and licensing, or sound and vision.
Well, the Sound and Vision Fund would be approximately 14 million per annum.
Yeah.
That's what we would be that would be the total amount. And then our own budget obviously would be in the region of just under 5.
Just under 5. But then there's another fund that the authority manages, is it not? For broadcasting, the 100 million. Did not hear you say a figure, sorry, in your opening.
Sorry, no, the 100 million was the total of the broadcast fund since it began. It's 14 million per annum, but that's since 2006.
So those 38 people are managing a fund of approximately 14 million each year.
Well, yes, I mean they're obviously they're doing all of the other activities of the BA as well, but I mean that would be one key part. But certainly, yes.
Has there been an increase in staff?
No, there actually has been a reduction in staff since. I suppose going back to when the BAI was previously the BCI, the Broadcasting Commission of Ireland. We would have had a full-time equivalent of 36 as the BCI. We now have a full-time equivalent of about 32. That would have we obviously would have been caught by the moratorium on the public service. But equally, when the Broadcasting Act of 2009 was introduced, we weren't given any additional staffing to support the activities that were in that particular piece of legislation.
And just regarding the balance between management and administrators, would you see that as being a normal arrangement to have?
Well, I think given the nature of what we do, I mean, it is, there's a lot of policy work. It's policy development work there's a high level of that in terms of what we do. Like, for instance, if you look at last year and indeed into the current year, we're doing the review of public funding for public service broadcasters, introduction of codes on advertising and programming. There's quite a degree of policy work that's involved in that. So yes, I think the balance, I would feel, is about right.
Okay. I mean, it would be fair to say that the administrative staff are not acting up, but given the nature of the work they're doing.
I think what we're doing, the way we've structured the organisation in terms of how we operate is because of the nature, the numbers that we have, we operate a matrix structure where effectively people work across different aspects of the organisation. So, for example, just to give you a very, very, very straightforward example, the Director of Engineering is also the Head of Compliance, supporting the work of the Compliance Committee. My colleague Margaret Tomilty here is dealing with the development of the Statement of Strategy, and very shortly we'll look at the development of the Code of Programme Standards. So the staff work right across the organisation, and depending on the priorities within the work plan in a given year.
And if I could ask Mr. O'Keefe, just in relation to your fees, because it's mentioned in the note that has there been agreement there in terms of a contract?
It's in discussion, in negotiation. I would hope to have it resolved shortly.
Okay. And then there was another note on this one person, one salary, and the authority coming to deal with that.
We are in discussion with the department on that issue. An issue has been raised by one of the members concerned, and we're having discussions with the department about resolving that particular issue. Is the authority having a difficulty in complying with it, or? We're in discussion on clarification as to the nature of the appointment of the authority members and what's the requirement in relation to this direction. And does this relate to board members, or does it relate to staff as well? Board members. Board members.
Yes.
Okay.
Is it a case that board members then, or some board members are receiving a number of fees for wearing different hats in the structure of the organisation?
No, I think it relates to the principle of the implementation of the one person, one salary provision.
Can you explain that? Sorry, just before the
Its applicability in relation to the terms and conditions of the appointment of members to the authority. So I think we've sought clarity on that from the department. We're in discussions with them on that.
On whether or not that
It should apply
to board members or to that particular board member.
Based on the terms and conditions of their appointment.
Sorry, does that mean that whether or not you could pay them more than one salary, or?
Well, it's whether we should pay them a fee. I mean, whether we
fee
should
at
pay them
all?
a fee as a member of the authority. Yes.
Because when you look at the fee then structure for the board members, every board member is in receipt of a fee,
Yes. Yeah.
but some do not get expenses. Is that correct?
That's correct. I mean, the ones who get expenses are primarily based in different parts of the country. I mean, that's where that's related to. You'll see the ones who are based in Dublin. I think there are no expenses involved.
So the expenses are for travel and accommodation for boards?
Exactly. Yes.
Is there anything else that can be expensed?
No. That's
So it's travel and accommodation?
just travel and accommodation.
Okay.
That's it, yeah.
Okay. And then in terms of, just moving on then, the expenditure side, consultancy fees.
Yes.
In 2011, I think it was 545,000, just on over $500,000. What was that for?
Well, there's a range of I mean, the nature of I suppose the activity that we do, like for instance, the annual public funding reviews for public service broadcasters, the development of codes. There would be a range of I mean, the nature of what's required in that. We wouldn't have that expertise within the organisation, so we would use outside consultancy firms to support some of that work.
What work? Sorry, what work would they have supported?
Well, for I suppose the ones that spring to mind would be we have details of that actually. Yeah.
We can give you details.
Yeah, I can give you some details. In terms of 2011, it would have been work to support the review of the public service broadcaster, the annual review of public funding. In terms of financial advice, the investment of the monies relating to the broadcasting funding scheme. There would have been significant investment in that year in terms of IT. Work to support the Children's Code, the development of that. And it also that consultancy title also includes research as well. So they were some of the top line ones: the Treasury Management, Children's Code, RTE, IT. A lot of the research would be economic focused as well. And if you take the likes of the PSB work that we do, the public service broadcasting work, you're looking at quite significant economic analysis of a marketplace and building up then to a review of public funding, I suppose, on which quite significant decisions are being made. So in terms of being quite a focused economic skill set, that's not one we'd have internally. And it's one that, I suppose, if you go and outsource it, you're able to put concerted economic expertise at it and over a short period of time.
And that review of broadcasting happens how often?
It's an annual review of broadcasting of the public service broadcasters, and we're currently this year we would be doing which started last year, but would be continuing, would be the 5-year review. It's a major piece of work, the 5-year review of public funding.
And if there's an annual review of broadcasting, though, would it not make sense to have someone with that skill set in-house if it's something that's happening on an ongoing basis?
I think there's a value in it is an independent assessment, and there's a whole range of things that you look at within that. So there certainly is a value in having that undertaken by independent, expertise in a whole range of areas.
Initial work would be done by you then, and a consultant would come in and...
We would set the framework
and
identify the areas that we were required to be evaluated and looked at, and then we would hand that particular work over to the consultants. And we would liaise with them. I mean, I suppose there would be 2 or 3 senior managers, like Celine and another of our colleagues would be very involved in overseeing that. In the current year, Margaret is looking at the annual review of funding and will be very much involved in that.
Okay. But do you have a breakdown then of how those consultancy fees were? I mean, how it was charged out? Is that something that we could see?
That would be within the accounts, absolutely.
Thank you. And in relation to legal fees, just from the note you provided in relation to the accounts for 2012, I think there was a bit of a jump between 2011 and 2012. 2011, 83,000, and 2012, it's close to around $250,000.
No,
Can you explain? Sorry, just to jump.
I mean, there was a significant amount of legal work in 2012. I mean, there's just, I suppose, the highlight pieces would have been the legal work on the Section 53 investigation on Mission to Pray, which was in the first half of the year. We would also have had, I suppose, significant legal work on the other investigative piece, which was the frontline presidential election. There would have been legal support on that. I think a number of other activities would have been, we developed the new contract for sound and vision, which was referenced in the CNAG report. We also are about to enter, during 2012, about to enter the relicensing of the existing local commercial network. We've reviewed the contractual and introduced a new contract for that. And the other elements, I suppose, we've had a couple of new codes, and they would require legal oversight before you probably will have seen in the last week that the issue around a register of interest was the subject of intense, I suppose, legal review prior to the introduction of the Code of Fairness that came in last week. The Children's Code that has come in around diet and nutrition, a number of legal issues are raised with that. I think the nature of what we do invites some of our stakeholders to potentially challenge, I suppose, the issues that we intend to look at. I think we consider it important that there is a strong legal basis for the actions that we take. I would make the point that, and I'm always touch wood when I say something like this, but we haven't been subject to a judicial review since 2005, and I think part of that, and they can be very costly, time-consuming, resource-consuming exercises. I think the fact that we have good legal basis for the work that we do and the policies that we introduce, I think assist us greatly in terms of that. So I think they're the reason that I think the nature of what we do will require significant legal outlets at different stages, and in 2012 it was more because of the major pieces of work that I spoke about.
When we look at something like, say,
sorry, I beg your pardon.
no, just looking at frontline, say, is that in relation to the presidential debate?
Yes.
Yeah.
Yes.
So what's the authority's role there from a legal perspective? Is there
the authority considered just in relation to that, I mean, first of all, it considered a complaint and addressed that in the first half of the year. But I think, secondly, then, RT did an internal report, and we would have reviewed that and the outcomes of that, and there would have been some legal support provided to the committee in relation to that matter.
legal support provided to which committee?
Just a legal advice,
to yourselves. Okay.
To the compliance committee is one of the authority has the main board, which is the authority, which is, if you like, the policy aspect, and then you have the two operational statutory committees, the compliance committee, which makes decisions on complaints and matters of that nature, and then the contract awards committee, which is the licensing.
Okay. And do you have any mechanism whereby if you have to incur legal fees because of an act of a body like RTE, whereby you can then cost those out to RTE? I mean, is there any way that you can say, we've had to spend this amount of money investigating something that's happened on your watch in your station?
Yeah, I suppose it depends on the outcome, and you will recall that in the case of the Mission to Pray, there was a fine of 200,000 imposed on RT as a result of that programme, and that we had the cheque in our hands for one day. It went to the Minister for Finance the following day, so we held it for one day.
Okay. We got a bit of interest for that day.
Could I make one other point on the legal, because it is important. We did introduce last year, or the year before last, a legal framework arrangement whereby instead of having one company that acts for the BAI in all matters, we now have 5 or 6, and anytime we have a piece of work, we tender for that, and that will assist us in bringing down costs over time, allowing for the fact that 2012 was probably greater than all.
No, and that's good to hear that you've brought in that framework. Then if we move on then in the expenditure side to premises and related expenses and lease arrangements, you're currently in Warrington Place, is that correct?
That's correct, yes. Yeah.
And is all the staff are housed there?
Yeah, everybody's there. We have 2 premises, as you know.
Yeah.
One is the original IRTC premises in Marine House. We had a sublet on that for a number of years. That came to an end, and we were very fortunate, I believe, given the amount of vacant premises that are around our area, that we've managed to sublet that in the last 6 months, but at a reduced cost. I mean, there's no question we cannot. We're still liable for the rent in the premises, but at least we are returning. We're getting
Sorry, not to interrupt. Sorry. Yeah.
Sorry, yeah.
No, there was a 5-year rent review in Warrington Place in 2006.
Yes.
Is that correct? And has there been a rent review since then?
I'll need to check that one. Probably every 5 years, is it?
It's every 2011 was the
2011.
last one.
There was one in 2011. And what was the outcome of that rent review?
No increase.
I don't think it reduced the rent.
No.
it didn't reduce. I believe it stayed.
Stayed as it was.
And the current rent then is... Current rent paid out on Warrington Place is...
On Warrington Place is 476.
476. Okay. And that lease is in place until 2021, is it?
It is.
Yeah.
It is, yes.
Okay.
Yeah.
And what was the need to take that lease on Warrington Place in 2003?
3. I mean, it was the practice at the time that leases were long leases. I mean, that was, if you look at the Marine House...
But why did you move to Warrington Place as well?
Oh, sorry, I beg your pardon. Yeah, the premises in Marine House were, when the original IRTC, which was the predecessor of the BCI, that was it was a small, there was a staff of about 10 people. It simply wasn't large enough to hold on to staff the full BCI staff, which was arrived between 2002 and 2003. So we had to move to a larger premises, and that was that's when we moved there. And again, that would have been the practice that we would, rental was for a particular time. I mean, the BCI, the premises we were in presently are very satisfactory in terms of our needs. Obviously, it would have been ideal to have been able to dispose of completely of the original Marine House premises. That hasn't been possible, but as I said, we've tried to we have been successful in subletting it.
Marine House you took on at 35 years.
Yes.
And then you moved to Warrington Place in 2003.
That's right, yeah.
And then you began subletting Marine House in 2006.
Yes.
So there's a 3-year period where Marine House was empty, or?
Sorry, we had a sublet from May 06 to December 2010, with the lesser the person who took the lease was responsible for all costs. And then from December 2010 to March 2011, and again on until March 2012, we had somebody in place for the latter part of that who took it at a reduced rent.
But sorry, just initially 2003 to 2006 was Marine House empty when you moved to Warrington Place?
As I recall, it was it was let at that period, at that point in time. I'd need to check on that 2003-2006 period, but as far as I recall, it was sublet during that period.
Okay,
we can confirm that too.
In the notes to the financial statements for year end 2011, it doesn't mention anyone in Marine House until 2006, if I'm correct.
We need to check that.
Could we go back to the detail?
Could we come back on that?
There were different parties renting over the period from 2003 and under different arrangements, but we certainly had attempted at all times not to dispose of the lease, to actually sublet in the event that when, as it transpires, we were unable to actually dispose of the lease in full.
Okay, which is because if I am correct, there is a 3-year gap then in the note to the financial statements, because I couldn't see it there. But if you could look into it, I'd appreciate it.
Yeah.
And then there was a rent review on Marine House in 2010.
Yes.
And what was the outcome of that rent review?
Again, I think it would have been there would have been no increase, but it would not have been. It would have been held at the level that it was at.
But there was a new arrangement brought in for the subletting of Marine House at that time. But prior to 2010, or at least what I understand from the accounts, from 2006 to 2010,
Yeah.
the BAI was not bearing any costs for having Marine houses.
Exactly. Yes. Yeah.
But then that changed in 2010.
It was the I suppose the economic environment and just getting a deal with somebody to use the premises.
So a different person came in to sublet, and there was a change in tenants in 2010?
In 2012, no, please were there throughout.
Yeah, sure.
Yeah, no, there wasn't a change in tenant. I think there may have been a change in the arrangements under which they agreed to stay on. I think they agreed to stay on for a short period of time. I think it was on the basis of a reduced rent. So rather than having the premises completely unoccupied, we chose to enter into an arrangement. There was a series of very short leases arranged with They were extended and renegotiated from time to time. We have a new tenant in since 2012.
Okay, but just for that period, that tenant is in 2012 is a wholly separate entity from the person who's
Yes.
occupying it up until.
Yes.
There's no sort of crossover in
No.
company or okay. Just because you were bearing no costs for the premises, and then all of a sudden you're then responsible for the operational costs,
Yep.
half the rental costs, and half the rate costs.
Yeah. And that arose because of the environment. The tenants at the time had put us on notice that they were going to leave, and then proceeded to renegotiate. At that stage, we were facing a real possibility, having had some advice from Lisney's. Actually, we chose to renegotiate with them to get them to stay on and extend their tenancy on a reduced rate because of the real fear that we had that we would have nobody in occupation of the premises at all. So in other words, we were attempting to offset some of the costs rather than having to bear all of the costs ourselves on a premises that wasn't being utilised.
And what's the increase then in cost to the BAI as a result of that new arrangement that came into effect in 2010?
50% that they pay, is it?
It's 137 per annum, and we are now liable for 50% of the rent and the rates.
Okay. And with the new arrangement now for the new tenants, is it the same deal that the previous ones were getting? Are you paying all the operational costs, half the rent and half the rates?
We have the rent and the rates, and it's for a 5-year arrangement.
For a 5-year period. And is there any relationship at all between the tenants that were there from 2010 to 2012?
They're completely separate.
Completely separate. There's no.
One is an advertising company. I think this one's an engineering company.
Okay, and that advertising to engineering has been a change to that.
Yes.
As well. Okay. Move on from that then. Thank you. Just continuing on down to the expenditure column in relation to depreciation. And there's a line in about, I know you've got IT systems as well as then there's a different line for technical equipment. I think in the depreciation column, I'm going to find the detail.
Note 5 to the accounts.
Yeah, note 5 there, page 12. I see, sorry, just computer equipment, a figure for 2010.
Would be for our engineering.
We have an engineering equipment which would be used to, when we're reviewing, inspecting the transmission facilities of radio stations, television stations.
Okay.
That's separate from the computer. Would be largely in-house.
Okay.
This would be stuff that would be used on the.
And can I take it then that the column for motor vehicle then is, those are vans that are used by the BAI? Or?
It's a single vehicle.
It's a Jeep.
Yeah.
It's a Jeep. That's used for...
It's for technical.
The engine.
Yeah. Okay.
Driving up mountains, basically.
Right, but it's not, there's no personal use of it. Okay, thank you. And just continuing on down then into debtors, I have a figure of 1.3 million, I think, on the accounts. Is that?
Did you want
Yeah, but
specific details on
that?
that?
Yeah, please, thank you.
Well, I think we'll come back with some of the details on the end year debtors if we could. They would be just, they would be, I think, the normal, that would be levy debtors, I think would be included in there.
Debtors, prepayments, broadcasting fund and others.
69 there, yeah.
Sorry, yeah.
Broadcasting fund would be a debtor as well.
Would be debtors. The broadcasting fund debtor, I think that would be they would be the costs that would be the costs owing from the broadcasting fund into the BAI.
That haven't been
costs, yeah.
paid up yet, or?
Well, there would be any amounts that would be outstanding at the year end.
Okay, and then just in relation to the first line I have is debtors 676. This is in the breakdown of debtors, sorry.
I'll have to give you the breakdown of that. We can forward the breakdown of the 676 debtors.
Should you not have that figure?
Well, I think the bulk of that I would expect would be advertising levy debtors, but I can confirm the exact breakdown of that.
I expect that advertising levy debtors would be the largest bulk of that.
You can expect, sorry, advertising debtor is someone who didn't pay. Okay.
Have paid on advertising debts.
Because the figure was 888,000 in 2010. So are we having a lot of people not paying us?
Well, it's not that they're not paying us. I think there's a, there would have been, look, there would have been challenges for some broadcasters. I mean, it would be, there would certainly be plans in place, and we would, the payment rate would be good, but we would be, I suppose it would be something we'd be working on an ongoing basis.
But do you have a plan?
But they must pay within 30 days.
Yeah.
And I mean, some of this would be where they haven't paid within 30 days, for example.
Or longer.
Or some of it would be longer, some of it would be, that we would, but I suppose it's something that we would be reviewing on a monthly basis.
If there's an outstanding then fee there, are they still able to contract new services or to be able to advertise or?
I think we would have arrangements in place with every single contractor, that we would have an agreement, and if there was money outstanding, we would have an agreement with them as to how that would be. There would be an agreement for payment of that.
But if there was money outstanding, that wouldn't preclude them from pursuing, further contracts.
It would be, if there wasn't an agreement in place, I think I would say. I think there must be an agreement in place to this is in relation to these are broadcasting contractors now as opposed to the sound and vision people. There would have to be an agreement in place for payment of that, yes.
Agreement for payment. And then who has oversight then that those agreements are being met?
Well, we would meet, I mean, operationally, I suppose the senior management would meet on a fortnightly basis and we would review that, probably on a monthly basis review where the position related to debtors would be.
Okay.
I think it might also be borne in mind that, again, as the fund was, as the levy scheme was becoming up and running and operational over those early years, arrangements were being put in place, etc. So there was some accommodation to be had. I think that's why you're starting to see some decrease in debtors from 2010 through to 2011. And I can give you perhaps a provisional that has been reducing year on year. Sorry, no, it wasn't. It was actually quite high again in the end of 2012. As to the list of stations and that, I don't have those to hand, but we can certainly give you some detail on that.
Okay. If you could, I'd appreciate it. Thank you.
We have to let the sector, and certainly the newer states within the sector, they're finding things tough. And again, we have to have. There's an element of we will look to agree with them, payment plans, whatever. I mean, it is a challenging environment for.
Well, I appreciate that, but
I think that's,
but look, if you're going to put payment plans in place, you want to make sure they're being
absolutely. Absolutely, we would do that.
I can just get the figure for 2012 because we weren't provided with that one on the debtors.
Yep.
If you have
This is a draft figure. I must add, and the figure was 1.386 million at the end of 2012.
Sorry, I beg your pardon.
1.386 million.
Okay, so it's gone up again.
Yeah.
Yeah. Okay.
That is the end of year.
And that is something that's kept under review by the board members.
It's also, I should have added that the Finance Audit and Risk Committee, which meets, has met 8 times last year and meets on quite a regular basis, would keep that. We would be obliged to report to the Finance Audit and Risk Committee, and this would be one of the items that would be on
the end of year figure would include the invoices, amounts invoiced in December. Yeah. So it's not representative necessarily of the debtors figure throughout the year. I think that should be
That's
quite
an important
point,
isn't it? Like the last invoice of the year goes out on the 1st of December. They're obliged to pay by the 31st of December. If they haven't by the 31st, then they go into that. Yeah, but it may be just, many of it, an awful lot of it may have come in the first week in January, for example, but it wouldn't be reflected there.
Yeah, I think it's very good to hear how regular your Finance Audit and Risk Committee meets, because I know from other boards that I've either been involved with or that have come before us, they wouldn't meet it regularly. So obviously this is something that you're keeping a close eye on.
No, and they're very, they are a very conscientious group, but they're a subcommittee of the board, as you know, they treat the issue very.
I think it's important that you let them know this point.
I will
point that in particular.
They'll be very positive about that. Yeah.
Thank you. And then just continuing on in relation to loan facilities and cash flow, because you've got a cash flow problem now, and it's not unrelated to this situation for the last, is it a year or 2 years?
Yeah, we will probably have an ongoing cash situation, and it happens at a particular point. It happens at just before we, for example, it happened at the end of February, before we issued the invoices for March, and then it's resolved by the end of March, and we have an arrangement in place with the NTMA to cover that. I suppose it's linked historically to the fact that we are funded by the levy, And because the levy scheme was established by a quarterly payment in arrears, we in effect had no funding as an organisation until about April of 2010. So it's effectively that historic.
You're constantly kind of catch-up positions.
Exactly.
The money on accounts into that.
But the arrangement we have with the NTMA is very satisfactory in that it's a short-term loan facility just to tide us over the...
It's worth what amount, the loan facility?
Sorry?
The facility you have is worth what amount?
It's 300, isn't it?
Typically, the amounts we've drawn down have been no more than 300,000, but the loan facility is up to, I believe, 1 million euros.
It's generally around 300,000. That's to date. That's the most we've had to look for.
And did you have to get permission from the NTMA to get that facility? Is that
we had to get permission from our department and the Department of Public Expenditure and Reform.
Okay.
To do this as well.
Okay. And I mean, in terms of then the your cash flow and your short-term deposits and the money that you have at bank and on hand, I mean, if I'm just looking at the figures correctly here, sorry, 2011, short-term deposits at 1.5 million. Is there not a facility to meet the cash flow issue from your...
No, I don't believe that doesn't relate to...
Sorry, we will need to come back to you on that.
Just to let you know, I'm looking at...
Yeah, no, I see that the page 70 you're looking at. Yeah,
well, it's sorry, page 20 on my...
Sorry?
Page 20 in my document, you're saying page 70?
Oh, yeah, sorry.
Yeah, sorry.
Yeah.
Sorry.
Yeah.
I'm just not... see that in the under 14 cash flow statement, and it says short-term deposits.
Yeah.
And at end of year 2011, 1508, 1.5 million.
Short-term broadcast funding scheme.
Sorry, some of the broadcast funding scheme monies would be kept in a short-term deposit to enable liquidity for drawdown by the various grantees.
So that's for drawdown by them?
Yeah, for that we would be allocating. So the bulk of the monies for broadcast funding scheme would be kept in higher interest deposit accounts, but we would have to keep a certain amount on short-term to enable cash flow for the grantees of the scheme.
Okay, and then the cash at bank and at hand figure of 1573. Sorry, it's actually on your screen.
What you're referring to?
It's just on your screen if you look at your computer screen.
Sorry.
The first line, under 14A.
Yeah. Sorry, could you repeat the figure, please?
The figure is 1573. It's the first line, cash at bank and at hand. We have it at 31st of the 12th, 2011, underneath in that last column on the right, 1573. Below it is the short-term deposits figure, 1508, and then the total is 3081.
And I suppose the difference, the cash at bank and on hand would be the typical current accounts. The others would be shorter-term deposits.
But in terms of the money then for the cash flow needs of the drawdown of 300,000 typically, could that not be met from those funds?
Well, I think, first of all, I think we can't use, our cash flow requirements cannot be met from any funds relation to the broadcasting fund. That's the first thing. It is ring-fenced under the statute. So that's the first thing to say. In relation to our own cash, I think at times our own cash position can be quite good. I think, as Michael Keefe has said to you, it occurs at the point before the levy. Because levy is operated on a quarterly basis, our cash flow difficulties tend to come at the end of the second month of the quarter. So our cash position can be quite good at times, but it can become quite critical in that third month. So when we draw down, we've been able to repay it pretty quickly. The profile can be quite good at particular points in time, and I think that's what you're seeing.
There's a pinch, though. You think at that third period, there's a pinch.
That's it.
And that's what
that's the difficulty.
Okay.
So
right.
our cash flows tend to be quite short term.
Yeah, rather than looking for some sort of discretion where you could dip into that fund, you felt it was better to have an actual standing...
Well, it's not that we felt it was better. We actually are prevented under statute from actually using the broadcasting fund for cash flow purposes.
Okay.
So that's why we've had to draw down for our own needs. The way our expenses are Yeah, okay. The cash that we had on hand and in the bank, this would be, in terms of our current account, would have been 621,000 at the end of 2012.
Okay.
That would be, I suppose, a little more than there will be a little more than a month's cash flow, so it's quite tight at that point in time.
Deputy, as weary as I am of abusing a post I clearly don't have, we're now nearly at twice your
Sorry, I beg your pardon. No, I will conclude.
So I just want to try and let other colleagues in as well. And I'm sure the proper chairman will let you in at the end as well.
No, and I'll just conclude. Thank you very much.
I see he's here now.
Acting Chair, does that still stand then? Or can I continue? I mean, is that still...